This is Californian Representative Alan Lowenthal, a Democrat. He is a member of the House Committee on Transportation and Infrastructure, which issued a report on the Boeing 737 MAX program's early findings on March 6, 2020. The investigation revealed that Boeing's cost, scheduling, and production demands jeopardized plane safety, and that Boeing downplayed the problematic MCOS technology on purpose to escape FAA inspection. The study is devastating.
Boeing faces a lot of safety questions this morning because this is the second crash in just 5 months.
And after Davis released it, Boeing shares plunged 5.6%. However, the decline didn't end there. Just 2 weeks later, the stock had dropped another 62.5%. But here's something strange. Alan Lowenthal's wife neatly sold her Boeing stock the day before the committee's report was made public, avoiding the chaos that followed. Why not try this? Representative Bob Gibbs, a Republican from Ohio who serves on the House Oversight Committee, was spotted buying a lot of AbbVie stock in 2021, according to his financial filings. AbbVie is a significant American pharmaceutical business. That is all good to hear. Well, I suppose it would sound okay if you weren't also taking part in the Oversight Committee's investigation into AbbVie and 5 rival medicine companies' exorbitant costs. The results of a recent New York Times report that looked into the prevalence of conflicts of interest among stock market trades made by U.S. politicians or their families are fairly alarming include these 2 prominent examples. More than half of the members of the U.S. Congress who engaged in stock market trading between 2019 and 2021 had a conflict of interest, according to a quote that reads, "From 2019 to 2021, and 183 current senators or representatives reported a trade of stock or another financial asset by themselves or an immediate family member. And of those 183 people, 97 sat on congressional committees that potentially gave them insight into the companies whose shares they reported buying or selling." Think about that. The analysis discovered that over the course of the 3 years, politicians from both parties reported more than 3,700 trades that could potentially clash with their private and public financial obligations. Conflicts of interest have long been a feature of the U.S. political system, but in recent years, the public has grown increasingly dissatisfied with U.S. politicians who either abuse their positions of authority to enrich themselves personally or who have blatant conflicts of interest that prevent them from casting votes that are in the best interests of their constituents. And as you may have seen on Reddit, Twitter, or even simply in the media, Nancy Pelosi, the House Speaker, is the politician that has received the most attention during this entire process.
Because this is a free market and we are a free market economy, they should be able to participate in that.
Even while Pelosi claims that neither she nor her husband's stock market transactions involved any form of conflict of interest, there are numerous instances of stock market trading activity that just appears to be highly practical. For instance, her husband's acquisition of Nvidia stock earlier this year was one transaction that truly owed the public. Paul Pelosi exercised options here that he had obtained a year earlier on June 17th to buy 20,000 shares of Nvidia stock for $100 per share. Even though the options were supposed to expire on that day, the Pelosi family's ownership of a sizable Nvidia holding a week before Congress was supposed to vote on the CHIPS Act infuriated the general public and the media. Legislation that aims to support the growth of American semiconductor production and research. It's also important to note that this is not a singular incident. Pelosi has also drawn criticism for holding shares of Apple, Alphabet, and Amazon while Congress debates purportedly regulating these internet companies. Pelosi even purchased $220,000 worth of Visa stock at the company's initial public offering in 2008, only to later introduce a bill that was set to eliminate lucrative swipe fees for Visa and other credit providers. In fact, Nancy Pelosi's action in that particular case prompted the addition of a new clause to the 2012 Stock Act that became known as the Pelosi provision. In light of this, there are several instances of conflicts of interest when considering the House Speaker's and her husband's professions. Surprise! Over time, the portfolio has performed remarkably well. We can certainly all agree that there are many conflicts of interest in the U.S. political system at this moment, but I was curious how all of this is actually legal. And as usual, the solution is a little hazy. Insider trading in the U.S. Congress was really rather popular during the global financial crisis, and in 2008 and 2009, several lawmakers came under fire for benefiting themselves at a time when the typical American saw their retirement account practically slashed in half. The Stock Trading on Congressional Knowledge Act was put into effect in 2012 as a result of this activity, greatly increasing the reporting requirements for stock trades by members of Congress and making it clear that there exists no exemption for members of Congress, congressional employees, or for other federal officers or employees from the insider trading prohibitions in federal securities law and regulation. Fair enough, this statute did assist in cleaning up the fully developed insider trading. A 2004 analysis of the results of stock trading by U.S. senators in the 1990s discovered that senators typically outperformed the market by 12% annually. In stark contrast, U.S. households underperformed the market on average 1.4% annually. The individual equities that members of Congress reported purchasing and selling between 2012 and 2020, according to a recent analysis by Dartmouth College, did not, on average, perform better or worse than other comparable stocks. House and Senator stock results are consistent with random stock picking, they found. Therefore, it appears that the Stock Act's passage significantly restricted U.S. politicians' capacity to enrich themselves by trading stocks on insider knowledge. However, the act does not completely eliminate conflicts of interest. For instance, let's imagine a senator invested several $1 million in Meta a year ago. The problem still exists that, if, for example, Congress were debating whether to crack down on social media companies to protect American citizens' privacy, our mate, Mr. Senator, obviously has a vested interest in voting for whatever outcome is best for Meta. In that time, Meta shares have fallen 60% while the general market has only fallen 17%. Therefore, they have clearly not outperformed the market with that one, which could indicate that he votes against his people's interests, something that many Americans now wish to stop. They merely want stock trading by politicians to be prohibited. In fact, according to a recent poll by Morning Consult and Politico, 2/3 of respondents want a complete ban on stock trading by U.S. officials. Additionally, neither the tendency among Democratic nor Republican voters changes. Even a few politicians have expressed support for such actions. Now, whether or not you believe them is a very different issue. However, Texas Republican Chip Roy is quoted in the New York Times article we've been talking about as saying that the American people don't want to stay trading for profit and engaging in active trading of the very equities that are connected to the policies that we are deciding on and voting on every day. But given that, is anything being done about it in reality? In actuality, yes. Again, it has to be seen whether or not this is all approved and whether conflicts of interest are truly eliminated. However, there is a trend to limit politicians' stock trading options. Specifically, the measure aimed at preventing monetary conflicts of interest in government. The wording of this bill, which seeks to prohibit members of Congress and other government officials, including Supreme Court justices, as well as their spouses and dependent children, from owning or trading stocks, was only just made public a few weeks ago by the House Democratic leaders. Additionally, it increases the penalties for breaking the federal conflicts of interest law, but since the fine has already increased from $200 to $1,000, I don't think it will seriously hurt the finances of these politicians. But according to this legislation, officials must transfer all of their stock interests into a blind trust that is then independently managed. Additionally, every individual stock added to the newly established blind trust must be sold within 18 months of the trust's formation in order to prevent future conflicts of interest from being revealed to lawmakers. On the surface, this appears to be a fair strategy to wean politicians off of their private stock holdings. They don't have to sell the shares right away, which could require them to face significant capital losses, but they do have to stop buying and selling equities on their own, and the stocks they did hold individually will eventually be sold by a separate portfolio manager. But sadly, there is already a loophole, as with other legislation that conflict with politicians' financial interests. Walter Shaub, the former director of ethics for the Obama administration, has already expressed his disapproval of the new act on Twitter, stating that it was passed as a response to the Watergate crisis that brought down the Nixon administration. That law established stringent new guidelines for blind trusts within the federal government, among other things. In Pelosi's proposal, each ethics office would be free to grant anything they choose and refer to the arrangement as a blind trust, eliminating all of these rules. Absolutely anything. This measure places no restrictions on the authority of these officials. Therefore, the bill would substitute 5 separate standards with varying degrees of latitude for the one rigid statutory norm that is applicable to all of these departments of government. There are many reasons to be cautious about abolishing the rigid, unified criteria for blind trust that is currently in place throughout the government. One reason is that the Senate and House ethics committees have a bad reputation for being lax. They haven't enforced the Stock Act for the past 10 years, and with that statement, he links to a piece that details how, over the past 14 years, the Senate Select Committee on Ethics has declined to take any disciplinary action. Thus, if the measure is passed in its current form, the meaning of a blind trust becomes extremely pliable. Schaub argues that without a clear definition, conflicts of interest simply won't be eliminated. Instead, they will merely be covered up by a new layer of complexity. Therefore, it would appear that even while Congress is actively drafting laws to ban stock trading and reduce conflicts of interest, more work is undoubtedly required to guarantee that this legislation is extremely stringent and thereby successful. However, now that I've said that, guys, please let me know what you think in the comments section below. Should individual stock trading be permitted for these US politicians? Let me know in the comments area below because that is up in the air. Give the video some likes. If you liked it and would like to see more, please subscribe. I appreciate you coming. See you all in the following video.